Monday, May 10th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why silver is going to lead the way in the monetary precious metals bull market. Yes, I think platinum, palladium, the other metals will do well as well, but we mostly covered the monetary metals here because our channel focuses on money and the monetary system. And we're going to look at the gold-silver ratio, which is basically the price of gold in silver. That's all it is. And believe me, the bullion banks, the central bankers, look at that ratio. I remember really well when I started out in the business in the late 80s at the small private bank in Geneva, Switzerland. We did a lot of foreign exchange. And the dealer at my firm, he was very experienced. He used to be a foreign exchange trader for UBS before he moved to our firm. And he used to tell me a lot about the gold-silver ratio. Of course, at the time, I wasn't into precious metals as money. For some reason, I didn't really look further into it. Gold and silver at the time we're not really doing much. But yeah, we're going to look at that. Before I start talking about silver and gold, specifically silver, hopefully I'll be doing an interview with Wall Street Silver YouTube channel. I highly recommend you subscribe to that channel, Wall Street Silver. They haven't been around for that long, the YouTube channel, but they've already got over 10,000 subscribers. They've been interviewing a lot of interesting people, of course. And the other thing I recommend is that you follow their Reddit group, Wall Street Silver. If you're on Reddit, they've got almost 77,000 subscribers, a lot of activity there. I am on Reddit, but I haven't really gotten used to use Reddit. I'm getting there, but there's a lot of fun stuff they post, a lot of pictures, a lot of memes about physical silver. And that's the whole purpose of Wall Street Silver. They've joined my way of thinking because I've been telling you guys that only physical gold and silver really will slay the bullion banks. And it's great to see the general public waking up. Of course, we need a lot more people, and that's why, tell your friends and family about the Wall Street Silver movement. Share the links to their Wall Street Silver subreddit group and Wall Street Silver YouTube channel. So, gold and silver ratio, and why that is important, and why it has been a great indicator for precious metals bull markets, and why silver always outperforms. It's just the way it is because silver is a smaller market. It's a more volatile market. It's more of an affordable market to the general public. So silver seems to always outperform in this fiat era in the last 50 years or so, because prior to that, gold and silver were money and they weren't really traded like they're now. And unfortunately, that's the way it is right now. But we can take advantage of that. Am I selling my gold to buy silver? No, I just right now focus maybe on buying a little more silver than gold. I'm not really playing this gold-silver ratio, but some of you might want to do it. It's difficult because if you do it in the physical market, you're gonna be how can I say, caught paying premiums here and there. But over the long term, if you're heavily into gold, you don't have any silver, it's not a reason not to maybe sell some of that gold into fiat, unfortunately, and take that fiat and buy silver. You might be able to find a dealer that will not go through the fiat, which would be ideal. So first of all, I'd like to show you monthly chart. So you can understand why the gold silver ratio is important, and when this ratio really drops, it corresponds to a bull market in precious metals. So we've got the monthly chart going back to the early 90s, and you can see that there's always been some good resistance around the 80 level here after the mid 90s. And if you look at the level where we reached around 80 in 03, that was just before gold and silver, and especially silver, because silver had been quite moribund until then. That's when silver started picking up. And then that ratio dropped in 2006 to around 45, went back up, but then it dropped to just under 50 back when gold hit an all-time high above 1,000. I don't think silver reached 50 at the time. I think the high at the time was maybe 30 or just below 30, and that ratio bottomed there. And then we had the correction in 08 when gold went from over 1,000 to 680, and silver, I think, dropped all the way to 9. So that ratio went back up above 80. It went exactly to 80. That was towards the end of 08. And then we had the huge run in gold and silver up until 2011. From 08 to 2011 or early 2009, gold went from 680 to 1920, and silver went from 9 to 50. And you can see how that ratio almost went to 30. It went to around 32. And ever since then, that ratio really has been in an upward trend. Last year, we had a huge, unprecedented spike in the ratio. It meant that you needed over 120 ounces of silver to buy 1 ounce of gold, and we had never seen the ratio that high. And since gold and silver bottomed in March of last year, that ratio has been in a downward trend. So now I'm going to show you a weekly chart to show you where we are in terms of that ratio. So I think it's starting to look good. As you can see here, the ratio has turned around since the end of March, and it's going down. It accelerated last week, and I think the really key level here should be around 63 and 62. If we're able to break through there, we could have another big move up in precious metals, led by silver, of course. So that's the gold silver ratio. Before I look at the markets today, just wanted to show you also the dollar index chart, because the dollar is starting to look relatively weak versus the major fiat currencies that are measured in this dollar index. Almost 2/3 of the dollar index is the euro, and then you got the yen, sterling, you've got Canadian dollar, Australian dollar, Swiss franc. And as you can see, the really important level in the short term is going to be just above 89. And since end of March, again, it seems to be March was the important month when gold and silver bottomed, when the dollar topped. We've been turning lower in this ratio. So this is a 3-year chart, and it's weekly. So it's not a short-term chart. Dollar could do things intraday or in a daily basis, but it looks like the trend is lower. So if we go to a 10-year chart now, you will see why this 89.20 level or thereabouts is so important. And after that, really the last support, or the last line of in the sand, so to speak, is just above 88, around 88.15. You could expect some fireworks, not only in the precious metals, but continued fireworks in commodities, even though the general commodities, especially the base metals, might take a little bit of a breather because they're really going ballistic. And we're going to look at that right now as we look at the markets. So it's 8:24 a.m. London time. We start with gold as usual. Spot gold, which is basically the paper price interbank. Yes, gold is traded as foreign exchange by the banks, gold and silver. That's why their mnemonic or symbol is XAU. That's for gold, and XAG for silver. For the dollar, of course, is USD. For the pound is GBP. So those are foreign exchange mnemonics. So right now, spot gold is up just under $4 at 1834.50. The range has been 1829 to 1839. So the resistance was set last Friday. It's around 1843 right now. So gold taking a little bit of a breather, but still up on the day. Silver leading the way a little bit here. Gold is only up 0.2%. Silver is up 2/3, just over 2/3% at 27.64, up 20 cents. The high has been 27.84, the low 27.43. To the stock market, the Dow futures is up 69. The NASDAQ 100 is down 42. S&P is virtually unchanged. Before I go into the currencies, let's look at the base metals, of which copper is a component. While copper is raging ahead, we made a new high last Friday. We broke through 466 in high-grade copper, and now we're at 486, up another 2.5%. So going really ballistic. It's broken out a really important historical level. The high at 466 was the high back in 2011. Is it going to keep going up in a straight line? No, of course, but it's going to be very volatile. The trend is higher, I would say. And it's just a reflection of a weaker dollar and a weaker fiat currency complex. Politicians and bankers are going to keep inflating, unfortunately. If you look at these charts here of aluminum or aluminium, they're also going gangbusters, so to speak. Aluminum is up 2% this morning. Zinc is up just under 1%. But look at iron ore, how it's going crazy. Iron ore is up almost 8% this morning, and even lead is doing well. So let's look at the fiat currencies now. We got the pound up 0.5% at 140.59. So why is the pound picking up? I think it's a reflection of the weaker dollar, maybe the local elections in the UK, and the fact that the incumbent government did well might be helping. The euro is actually down 0.1% at 121.46. The dollar is actually up versus the yen, about 1/3%. So the dollar is recovering a little bit here versus the major weighting currencies of the dollar index. But I think it's just a counter trend move. We're at 108.98. The dollar is up slightly versus the yuan at 642.39. We were recently as high as 648, 649. So the trend in the dollar is lower as well versus the Chinese currency. So let's look at crude oil now. We had the story over the weekend about this hack to a major pipeline in the US, the Colonial Pipeline. Some people think gasoline or heating oil might trade up. Yeah, and they have, but not that much. We'll have to see how this story evolves. If it's just something that's going to go away very quickly or something that could drag on. So WTI crude right now is up 0.5%, 65.23. Gasoline is up 1%. And heating oil is up just under 1%. So to finish off, the 10-year yield is up about 1 basis point. at 159. And as I've said, I think the bond market is just a fake market now. It's totally manipulated. I think yields all around the world, not just in the US, especially in Europe as well, they don't make any sense. That Greek 10-year yields are below US 10-year yields, and that German yields are negative. It's a sign of desperation by the central banks that they're manipulating these bond markets, because they can't have yields go up too far or too quickly, because it will bring the whole house of cards down. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.